So today's video, I'm going to be going over how to buy your first home as an entrepreneur being self-employed. I'm going to go over the requirements that you'll need. Also, there's different loan products that's tailored for self-employed, and also the risk and benefits of those loan products. And if you don't know who I am, my name is Meredith Silk. I'm the owner of Silk Mortgage. I've helped hundreds finance real estate, and I'm on a mission to make the mortgage process simple while also offering the best rate guaranteed. So let's get into it. Okay, so here are the requirements. So you must own your business for at least a minimum of 2 years or be self-employed for 2 years. And there is a way around this. If you've been in the same line of work for many years, you hold a license in it, for instance, like a dentist, they have a dental license, then you would only need to own the business for 1 year. Now, the banks look at your last 2 years of tax returns. That's how they look at your income. We would only need 1 year if you've owned your business for 5 years or more. And how they look at the tax returns is they look at your income minus your deductions and write-offs, and that's how they determine what your taxable income is. And piece of advice, if you are preparing your tax return and you're wanting to buy a house, make sure you put your lender and your CPA in communication together so that they both can structure your write-offs correctly. Okay, now let's go over your alternative loan options. So these options are designed for those that are writing off. If you're writing off a lot on your tax returns and you're not showing much income, then you can do these options right here. So with the bank statement loan, we would look at the last 12 to 24 months and take the income, an average of the income off the bank statements. We could also do what's called a 1099 loan, where we take the income straight off the 1099 for the past 2 years and average that. Then we can do a profit and loss loan, where they take an average of the last 12 to 24 months of your P&L and needs to be prepared by a licensed CPA. And normally the minimum down payment for these options is about 10%. Now let's go over what are the risks and benefits of doing the alternative loan like bank statement, 1099, or P&L loan. The risk is higher down payment. Like I said, minimum down payment is 10%. And you're also going to have a little bit higher interest rate than going with a traditional loan where they look at your taxable income off your tax returns. But the benefits are you're going to minimize your obligations to the IRS because we do not need to look at the tax returns. So you'll be able to maximize your deductions that you can write off on your tax returns. So if you're buying a house and you're self-employed, it's important to start the planning process now. So I hope you found this helpful. Consider subscribing, and I'll see you on the next one.